All right, everybody. Welcome to our first leading crypto public update here with Magic Internet Money, myself, and our order flow and open interest specialist, Max. See if we get the chat rolling in here. How you guys doing tonight?
Very well, mate. Very well. In the morning.
Doing good.
Yeah. It's Thirsty Thursday, so I hope you got your alcoholic beverage ready, Max. It's what, like 6 a.m. for you over in Dubai?
Yes, it is. No booze for me. My day would just go straight out the window.
Yeah. I don't know how we're gonna work that one out, but you're gonna have to crack one with us on here. All right, let's see here. Make sure the chat is slowly coming through here. I don't know why.
Yeah. No, Max could put a little Bailey's in his coffee or something.
Yeah.
There we go.
Exactly. All right, so we're just kind of kicking it off, right? So this is one of the first times, or the first time, I guess, we've all three just joined in on a public video here. We usually do our exclusive member-only market updates on Wednesdays and Sundays in the Leading Crypto Discord server. For anybody that's interested in joining that, there is a link in the description here on YouTube. We do cover the market exhaustively, or at exhaustion, I guess you could say. Altcoins, Bitcoin, order flow, open interest, Magic Internet Money goes in full depth analysis into Bitcoin. And he's been in the group now for 3 or 4 months now, and literally just walked us from, the first day was Christmas Eve, I think. And, from 52K high down to the 33K low to the exact low to the $47,000, $48,000 high right now. And then we, definitely have had a plan of action every step of the way there, able to really, identify key levels and just the market, momentum for the altcoins along the way. Just been a really nice pair. And then we got Max here who, like I said, over in Dubai, enjoying a nice Bailey's and coffee at 6 a.m, joining us on this lovely evening and Friday morning for him. And, really just providing some amazing order flow and open interest, educational resources, as well as just day-to-day analysis and updates. And it's just been, it's just been a really nice ride so far with you gentlemen in the last few months. So today we're just going to kind of kick it up and kind of go over the last few, major moves of the market. Maybe we'll take some suggestions from the crowd here, kind of go over some order flow, some open interest, take a look at Bitcoin, just a little bit of everything. Magic, you want to go up first, man, and just kind of take a peek at Bitcoin? Let's get your thoughts.
Yeah, no, definitely. I'm just going through the chat a little bit here. What's up, nerds? Yeah, that's us.
We have to show how we come down to that daily and bounce off it to the dollar.
Yeah, no, that definitely did happen. Looked like OC is done with H-bar. I will not tell Crypto Weatherman. So
oh, man. That's going to pump now.
Yeah. No. So, I mean, if we're really just walking through it, man, I mean, as simple as it gets, you have a pretty large range. It's been a range for quite some time. This is something that I've been calling a range since back here, that this would be the next macro accumulation range. And we'll see how this resolves. So we all know that we have like the doom, I call it the doomsday folder or the doom folder. Those are just where I put my high time frame ideas. They're not really that ominous, but we've been looking at it like this, where we're just ranging, right? And so it's given us some really key levels on the chart. And I always like to bring these back up because they are, in my opinion, the most important areas on the chart, right? So 47.6K, we were on about 47.707, obviously, but 45.9K and 47.6K. So these are time point of control and a volume point of control for basically all the price action that's occurred since we entered the range, meaning that, well, once we lost this area, where were we going? Well, we were heading back down to this level. You guys know that in the group, I think it was the third, actually a little bit before that, I gave you guys the box and then also the MPOCs we were looking for. So if you've been through the general chat, even we brought that back up here recently. So we were looking for these lows. Once put in, where do you go? Well, when you're cycling a range, you have to understand that you have to have validations and invalidations. But once we received those validations, which for us, we're coming in, somewhere around like, I want to say once you get over $41,274, which is pretty late to the game still, you have to understand that's just because you're working off of a local range inside of this larger one, that you're looking for these middle points right here. So Pretty important. I do believe 40.3K also does serve quite a bit of interest, if I recall, right here. So again, that's actually a level that's pretty relevant at the moment. So we will touch on that. But this would have been your first real indications that, okay, we get the bounce. We're getting back up to 40.3K. It's above that all-important like $38,000, $39,000 level just from prior ranges that we'd had back here. So once you get above that, then you can start really kind of looking at and targeting that, okay, well, I'm outside of this historical range. I'm now holding it as support. Where am I going? I'm going back to these high time frame targets. So just compartmentalizing and understanding the steps that it takes, because you can tell someone where price is going and it's going to chop around. And I always say, I can tell you guys exactly where price is going in advance, months in advance, and you will still mess it up because you'll get sucked into not understanding the moves that can take place and where the confirmations and invalidations do lie. So you can see that this has been a very important part of the chart. It also does serve as the EQ right here, and it will serve as support again if we come back down there. You could see support there. We would 100% have support there if we got there, right? Like, let's say doomsday happened and we started going lower from here, we lose 38K. Where's the first place of interest? Well, it's going to be coming in between this golden pocket here on this trend-based pull and this $35,000 level. Those are going to be the areas of interest. You could also see that as an area of interest just by literally looking at the price action that's occurred and seeing that this is where you're looking to. Okay, so very simple stuff. If we're looking at things locally, which we could easily do, we did come down to some important levels of support. So in terms of where we actually came from, right, you have a local golden pocket. Okay, so you can see that right here. Always good to know where your 618s are at. Obviously, it's a big level, but you did also have your order block. Okay, so the order block is always going to be something like right here. So you can see that you just touched on this order block coming in there. You'd have your I believe your golden pocket. We still haven't come down to the EQ of that order block, but it is there. So we knew this would be support and provide a bounce. Now, if we start losing these levels, living below about 37,700 here, well, then we're probably going to see the low of this channel. We'll see that golden pocket we just touched on, and we go from there. But until then, this is support until it isn't. So that's how I would view it. Now, once you're down in this region, where do you go from here? We've talked about this on the high time frames before. And this isn't to like move too quickly for people, but when we're just charting things, we have talked about how this is going to be, it's in a lot of public videos too, that we should be looking at the Q4 low, right? So this is the low from right here because we're trying to get back inside of this. And you can see that we have not closed our quarterly candle below this level yet for quite some time. So it's been 6 months above this level, and there's still 3 months almost of price action left. So this is going to be a level we're going to interact with quite a bit. But if you go back down to like a daily, you can see that when you come back up here off of the bounce, off of our, our golden pocket here, off of that order block, all that stuff that's there. And we'll go to, there we go, make it a little cleaner. You can see this is where we're getting hung up on, is our Q4 low. So all the levels we're putting on our chart, super important, always great to have. They always have a rhyme and a reason. They're not there just to like be random. So we know that we have to find acceptance back above 41,274 in order for anything to really get going. So if not, yeah, we have local ranges that we could be looking for. We know that this is the most relevant range to current price action. So if we're just like dissecting this portion of the chart, so to speak, you could see that this is going to be the range here. And I'll get rid of some of this other stuff right here so that you guys can see that. And so that these are the levels you should have on your chart between 44,800 and 38,000. Traditionally, when you get out of a range like this, you have a failed breakout, especially into a macro area like the one we just had, and you find acceptance back in the range, you give up the point of control, there's usually a pretty good chance you're going to rotate the range in full. That's generally what you should be looking for. Now, one thing we didn't touch on was, again, golden pocket. We're always talking about that. Where's our overall golden pocket now? Comes in right here. Okay. And what we need to know is the relationship of this move down to this move down, right? So what that means is I need to know time-wise here of recent, where is my timing coming in at? And you can see we just had our 618 and our 1-to-1's coming in on the 25th of April. So for anyone that wants a date, that's the next one I would be looking for. But between 38K and 41,750, that is really going to decide what goes on with this asset probably for the next few weeks. If we lose 38K, then more than likely we'll be trending down. We know that we have Pretty important support here, right here on daily, 36,270. You can see that we've challenged this level, taken the lows here, trap traders once, twice, trap traders again, and again, and we've not been back down towards there. So if we come back down to this region and we lose this level, it would make sense and stand to make sense that really only alerts that you should have set are this low here at 34 and then setting an alert all the way down here at 32,903. So that is how I would run down the market. That's how we got to where we are. It's been a purely technical move, been pretty easy to trade actually. If you're a range trader, that is. If you're not and you're into the bait titles, then that's probably been a roller coaster for you. This has been one of the easier things to trade, though, having macro targets, understanding that this was going to be the area to look for shorts. Once you got confirmation of that, wherever you had to put, I think for us, we were looking at the yearly open, which does come in a little bit higher here. And I think we actually cinched it up to like 46.8 because the weekly open was coming in there. And then there was like a level that came in at like 47.2 or something, like the overall point of control. But pretty simple stuff, in my opinion. If we get moves down, we have immediate targets. From there, you're just, playing the level to level game. This does have a technical target. We did talk about that. So if something were to occur where we did have that doomsday scenario that everyone is talking about, everybody and their mom is talking about this idea that will go lower. Not saying it can't. Just you should be prepared if it doesn't. Like, where am I right? Am I wrong? If we regain 41,750 or 42K, like, what's your plan? Like, are you comfortable with seeing this come all the way back up to 44,800 or even 45.9K and trading that move, or would you be stuck in the mud and getting left on the sidelines? That's what gets a lot of people, is they don't plan for both sides, and even if they do, they don't execute. So that's all I would say.
Yeah, exactly. And, that's what I was talking about earlier today was when, I was like, if everyone wasn't expecting this major, everybody's looking at 27 and 30K now. And while we can get it, we can run it up to 45 again. And, at that point, it changes the narrative so quick anyways, and then get that move down. But since this is going to be, recorded and on, on the channel and everything, since we pretty much in the group have gone over from when you joined even back in December, do you want to just kind of briefly go over like what walk us down, like basically, what the scenario of like, why did we come back down to here? Because, anybody that's looking at, the news catalysts and this and that, blah, 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 right?
So we'll just talk invalidation first of all. Number one, so when you're looking at this price action, this is just going to take a little bit of logic, I guess, and that's not to be rude by any means. But when you see something like this, where you have this capitulation event before this run up comes off, everybody says we didn't have a blow off top, but I would contend this is pretty blow off, which means that your bull market actually started back here, which this low is very technical. This is a 1-to-1 and a naked point of control. So this was a very technical level. That makes perfect sense why it front ran the gap. When we had this move, you can see that these ranges right here, they're very long. This one's like 120 or 30 days. This one was not quite as long, but it was still pretty long. And you can see the ranges now get shorter. Like this one right here was maybe from November up to December. So this is a little over 30 days. You can see how they're getting shorter, but look how the price is now moving quicker. And right here, which was technically a macro fib time, we had our first 30% pullback. And this is a longer range than before. And then this was a longer range, which ended up being distribution into another range, which brings you back into where we are now, right? And so when you're looking at this, and that's why in July I said this would be the next macro range. When we came up to this region, just looking at it, you need time to distribute this. So that's why something like a sideline right here makes sense, because you're expecting a range. These only work during ranging periods, that otherwise they're kind of null and void. So when you're looking at it and you're breaking down the timing of it, things just work out really, really well. So why did we come back to where we are? So again, if we're looking for a break of the range, we have that 58,822 level that we were looking at in terms of our doomsday chart, which was right here, right? So we had this overall range, but you don't want to fall in love with just, one idea that this has to be how you're looking at it. The simplest way to have looked at it was on a weekly time frame. So you got to really zoom out, right? So what we can see on a weekly time frame is you just come over here and you can see right away that when we formed this first local top, that this was the high. Okay, so $62,000 was the most important level on the chart. Then it became 58,000, and then it becomes, we look down here and it's no longer relevant. but it becomes relevant right here. And you can see why. You can see how it looked like the rally was over. We get above it. It's actually defended quite well. I traded this. It was a great bounce. It was a butterfly pattern into the top locally. And then also we had a butterfly pattern on the high time frames, which we'll go over in a second. But once you come back beneath the level here and you've swung fail it, right? So you could just say, well, maybe I've swung fail both highs. Not quite. If you go out to a monthly, sure. You could zoom out a little bit and you can see $62,000 still is that level. You know, we don't need that one more. We can see that this is the level. So $62,000 is your level. The weekly time frame is the sweet spot. You find acceptance below the level. We go back to our time and price line, which is projecting price pretty well. And you can just easily see that, well, we're probably coming back into some ranges, right? And so when we start looking at the ranges and breaking it down, that was during Q3. You could very easily start looking at this and dividing it out and saying, okay, where am I right? Where am I wrong? And it gets to be pretty simple. You know, you could say, all right, I have Q3's price action here, and then I have Q4's price action here. And we can see already, we'll get rid of Q3 real quick here, that we've come down and we've already lost the POC of the range. We're underneath our $62,000 invalidation level right here, right? We go out to our time and price level. We'll get out a log scale for just a second. We just don't need to be in log for that. And you can see that you're also giving up your one-to-one in time and price. You can see how well respected it is. You've given up the point of control and you've given up time and price, right? So what do we expect at a minimum? 53,800. Why is 53,800 so important? Well, I actually have it marked off as importante in this for the algorithm, because that's what I use to make some of my videos. You can see right here that this is from Q3 right here. This is the high of that quarter. So if we go back out to the 3-month, you can actually see this on the chart, right? So now what have we done? We've swung fail up here. We're swing failing yet again. Look at this candle. You know, this is not a bullish candle by any means. So you can already start to put the data in place that, okay, if we give up this level here at $53,000, give or take, or 53,800, I guess was the Q4 low at that point, you're probably looking to cycle some ranges. And at that point, it's a game of who's got the cleanest ranges and who understands where we could be going. Like you could easily just turn on, you know, the data from, you know, a high time frame like this and say, well, you know, if we give up $57,000, which was right here, we didn't have this information yet. That wasn't available all the way. It wasn't actually no longer a dynamic range till here, right? So you have to be able to divide it up. And for me, that's kind of where I come in, and that's where I do most of my best work. So I would look at it like so. And I know that as soon as we lost $53,000, failing to reclaim these levels, realistically, I'm looking all the way down to 38,200 at a minimum. And I know at that point, I'm just looking back to this old historical price action. And I'm just saying, okay, what do I have there? Now we're looking at market structure, not time frames. And it's just super easy. You know, if we go back to that, you go down to June, right? We know that this is where we're coming back to. Boom, tagged it. What happens if we find acceptance? You do cycle the range. Now we had some NPOCs down here that really shored up where we were going to be buying at and looking to buy. And that's just kind of how that worked out. Now, if you didn't want to use volume, you didn't have to. Again, this is what I walked you guys through, was this pattern here that played out. It was a really nice butterfly. You have some very nice timing on this for the distribution. You can see how well respected this is. Very nice, catches all of the dumps, even the high right here most recently. That's why that March 28th, when I gave you guys the Bartley here back in February, I gave it to you guys right in this region, right after the B leg, several days before anyone else had posted the idea. And it was coming in on the 28th, was the idea that we would do it on the 28th, because I was looking for distribution of a previous pattern. So really, really nice, very easy. So we were just filling in at that point Fibonacci levels. We talked about this at length, I believe. Let's go back to the July NPOC. We had our local trend here, the 1618. We have our overall golden pocket. We had an NPOC coming in here from previous ranges. And then from there, you're just looking to fill out and say, okay, I have fib confluence. I have range confluence from June. I've got, you know, volume inefficiencies that I need filled out. This is the most logical place for us to settle up right here. And if this box holds, we don't have to worry about further downside. If it doesn't, well, we come down to our other doomsday box, so to speak, and we play the game again. But we did come down to that level. That level did hold very nicely. And this is where you end up. This is how you find the bottom. You know, you just make the plan. It doesn't have to work out, obviously, but once it did, you know, again, you'd constantly hear me saying, you can't sell down here. You can only buy, right? So that's how we ended up here. It was just a range rotation. Once you found acceptance back into this, you lost $62,000. And I think you even publicly said that, any further upside is gone at like 60. So you had the right idea. Most people that were, in that camp were probably still hanging on to hopium all the way down to like here. It was just one of those things where if you understand volume and ranges and how price is going to rotate them and fill in certain voids, like what's bearish and what's not, like on a high time frame, especially knowing that this right here, this whole move was now in distribution, you had to understand that this was going to take, I think I had even stated when I started making videos on YouTube again, it's going to take better part of a year at a minimum. And we have been in this for over a year now, about 15 months. So yeah, that's what I would say is that's kind of why we're here where we are now. Looking at this as, if you're looking at it from a macro standpoint, it is a correction. And anytime you're correcting on something like this, from $3,000 to 60, 5,000, I guess 69 in this case now, but distribution on that's going to be insane. The amount of time it takes, because you got to think, when we distributed even this 14K top right here, right, just from 3K to 14K, this took a better part of, what is this, June right here when we actually topped, June, July, and it took all the way to March. So, I mean, that is, if we say July to March, it's 8 months. This is a much larger run up. This is like a 20x. So this is now taking 15 months, twice as long. So, yeah, that's the logic behind it. Hopefully that makes sense.
That was probably nobody's going to get that anywhere else at this point. Like that was perfectly portrayed. I don't even know how you have all these things on your chart, like just lined up like that too, just like so quickly, just click them on, like, and it's all like just readily available there. That's how much time you spend on these charts, man. It's crazy. And even if they're not right there, you just know where everything is in this beast. Yeah, no, crazy stuff, man. Are you looking at the chat?
Yeah, I'm just checking out the chat a little bit. Okay. I see Weatherman's in here. What's going on, bud? Hope you're doing well.
Good old Unk. He's got to lay off the
oh, he's going to steal the forecast? No, won't. I trust him.
He's got to lay off the bear bin.
We'll have Tim on one Thursday. We'll get him on here. It'll be good.
Oh, that would be a good one.
We'll have just a TA show, because I know other people like to debate like fundamentals. We'll do stuff where we actually just talk TA the whole time.
Sally, I don't even know what to make of that comment.
What did Sally say?
You don't want to know.
I don't want to know.
So just since I got you here, right, and we're going over that 15-month distribution, so to speak, the number one question, man, and since you just explain it so well, bear market, what's your thesis there?
I think it's too early to say bear market. You know me, I am an extended cycles guy. I have been, but you can be wrong, and that's okay. So I was actually explaining this to somebody on Twitter today. I had said I am trading this accordingly, meaning that while I've been buying Bitcoin at the lows here, entering short positions at places where you should be entering short positions. You can call that type of trading whatever you want. I trade inverse perpetual, so when I'm doing that, as soon as I close my short position, I'm right back into Bitcoin. I'm not going into USDT or having to convert or anything. It's just sending me right back to whatever spot asset I hold. So that is my preferred way to trade. I actually saw Tim mention 1x shorting on Twitter today, and I do that all the time. I am a 1x short fiend because I don't think that you need to play with high leverage to win in this market. Even in Bitcoin, the moves are nice enough where if you're just playing the macro moves, they're pretty easy to get, and you just need to be on the right side of them, buying and selling in spot or 1x shorting and 1x longing. I do some degen leverage trading as well, but those are always with much smaller positions on different accounts as well. So I don't ever put it on a whole lot of risk for that type of stuff. But bear market wise, where do I get super bearish? Anything underneath the 1-to-1 around 28K, I think you might have some issues. That is basically it. So it's still on my Twitter. It's public, where I was looking for this low to be taken, based on harmonics. Actually, it was just
right.
the low. It was the low to be defended. There was a shark that was there. I believe it's actually in the Doomsday, if I recall. Yeah, it's all right here. Final 5-0. Yeah, right there. So this is what we were looking for, is this B leg that was going to be taken. And the idea behind that.
I can't see your chart right now.
Oh, yeah, my bad.
No, that's good.
The idea behind this was market structure and just understanding harmonics right here. So This was your final 5-0 before you actually got your move into this bearish 3 drives pattern that was up here. I don't know what other people call it, but it was simply that. It's just a bearish 3 drives pattern. Very, very simple, right? Boom. Very clean, very easy. It's textbook. But you did have a nice blow off move into this. So now you're looking at the D leg, 43,017. If that is lost, that is like a late confirmation that you're going to come down here and challenge structural lows. And we did take them by about $100. I was making TikToks when this happened. I was literally telling people this is where I was going to be buying. So they can do with that whatever they want. And then after that, invalidation became 29,800. Closures below that, which you can see we retested very nicely here with a nice bullish bat. So this was a super, super nice pattern. It came into another shark. 2021 was like the year of the shark and harmonic. And so when you're trading harmonics, I don't get into it in the group a whole lot, but high time frames are going to be best. If you're trading these on like the low time frames, you're just going to be looking all day. It's really good to be looking at these on the daily and up. That's where you're going to have the most success for them. And they do have to make sense. So there's a little context that goes into it, and a little bit of timing as well. So, but yeah, anything below this level here in the B leg, 28,829 closing basis. So we start closing candles below that, dailies, whatever you want to call it. Yeah, you've probably got some problems. I would be looking down, probably more apt to, close out that gap that's on the CME futures. Let's see, where is that? That is my XLM chart. So if you haven't watched that video, apparently XLM is now more popular than XRP. That video got double the amount of views. But yeah, so there is a gap over here that you could be looking at between 26,000 and 23,795. Gaps don't have to fill. So I'm not like a gap trader. I just like to be aware of them. So the only time that becomes relevant, though, is, again, if you start losing some supports here. And it does begin right around that 35K region at this point. If you're just going off like the super high time frame, like $38,000 is a pretty big warning shot, because when you look below right here, there's really not much beneath you. If you come back down to like 38K, you can see how there's nothing there, at least locally here, of the most recent, until you come all the way back to this section of the chart. You kind of see where I'm looking at there? Like, we'll just put a nice horizontal on right here, this yellow one. There's not a whole lot of support that's been built up here outside of these two, sections of price. So that's relevant, I guess. And you can only come down to these like levels of support and resistance so many times before they break. So I would like to see price hold these levels to make that move up before anything. Otherwise, if we start closing below this, then yeah, the conversation of how low can we go is actually on the table.
Do you think that you'd only really lose them supports if, some big news came out? Like, I know we don't trade the news, but I think something big would have to.
Honestly,
if we would get to them levels below 30K.
I think that we would know beforehand.
Yeah, of course.
But I think the TA would show beforehand. But would there be any kind of news for it? I mean, probably. It seems like they always correlate. There's probably something. It might have something to do with. I know that. Well, Russia's starting to use chemical weapons. We're getting more involved. The U.S. just sent a ton of military equipment over to Ukraine. Stuff that we've been told not to do. So we're sending them everything from like advanced radar to like weapons, missiles. Like, we're talking about giving them, like fighter crafts and stuff. Like, I mean, it's things that Russia has explicitly said they don't want us doing. So we'll see if that escalates things. For me, that I don't pay as much attention. That I'm paying a little bit because it's relevant and it's all over my feed all the time. You can't get away from it. So it is what it is. But yeah, I mean,
with your favorite question though. Are we in a bear market?
Are we in a bear market? Well, I'll say this: I'm pretty neutral on it, and in my profile it always says, don't be bearish or bullish, just take good trades. And I think that's where you're at right now. Like, I've been largely short since up here, looking for shorts, playing some longs here and there, really looking for a reason to get long again. And I think that 42K level is pretty important, and so is that $44,000 level. So those would be areas on the chart that I'd be paying attention to if I was looking for signs that I should be getting into, a more bullish stance. I do stand on the point that extended cycles is a thing. You guys know that I have my my fib time running us out to the end of the year, basically, on this cycle. The gen pull on it. I know I've got my Gone fans up here. We were talking about those a little bit ago, but right here, this is where I'd be looking towards. And I have been looking for on this pull. is looking out to July for the next really macro important date. Then October and February of 2023 is actually a really big day for me. So I do think that February, towards the end of February in 2023, there's several fib time pulls that come in there for me. And I'd be curious to see where we're sitting, coming into that region, like what kind of price action we have. That's the most interesting quarter for me, is quarter one of 2023, to be upfront with you.
Interesting. The number one thing too is like, there is no, the crypto is just so new at this point in like, what constitutes a bear market, as far as like, I mean, obviously we've been in, from 69K down to $33,000. I mean, if you're looking at traditional market, bear markets and, falling under major moving averages and this and that, I mean, we've been there, done that since last summer. Yeah. But, what is a crypto bear? Like, what is the definition of a crypto bear market? Not one person can answer that. So it's always,
it's pretty tough.
It's like,
for me, I look at it as, when is the bear market? Because people are always asking, are we in a bear market? We're underneath X, moving average. I don't think that moving average are bad or anything. My dog is chewing on my headphones. But at the same time, when I look at it, I say it's really hard to use some of these high time frame ideas and moving averages, like the 20-week SMA, things like that, inside of a giant range, because it becomes large. It's not ineffective, but it does lose, some of its value in the sense that the price is just going to range in between certain values, and you're not going to be able to utilize those quite as much. If you're using them for momentum purposes, you're really looking for the angle of them, like the slope, things like that. Otherwise, yeah, I mean, it's hard to really define it. I would just use market structure, and I would say that if we start losing that $28,000 area where we've already settled up on, you've probably got some problems. This looks like a giant double top at that point. And I would say, short of like a swing failure pattern and a fake out to the lows, like a range reclaim, there's really no reason to like be overly aggressive, other than just DCA type of buying. If you're trading it, leverage is, you almost have to throw that out the window unless you get some kind of consolidation. You'd have to be spot buying. So I don't know. Yeah, that's for me how I define it, is I'm looking for that market structure break. This last local section of the price would have to break down for me to really define like an active bear market. And I know that's premature. It doesn't mean I've been longing every dip. It just means, that's how I view it. I will trade different than how I view it. I'm not in love with my own analysis. That's kind of it's a terrible way to go about things. I'm dating my own analysis here, guys. Like, I'll change it if I need to. Like, we get more information. If I get more information, we get more information. But right now, the high time frame says, until we're breaking down, especially below 38K, 37.7, whatever you want to word it as, there's really no reason for like massive alarm right off the bat. So,
yeah, no, that's good. I it's like, that's the thing too. It's like, that's everybody's favorite question. And like I said, I've not seen one person, be able to answer that, because there is no, what's the definitive, what's the breaking point? What's the line in the sand? There's, if, we've, we've, what's the word? Not invalidated, but, you've, oh man, you've broken every moving average over the past year and a half at some point or another, and then came back above it and then broke them again. And then, all this, aside from dropping down to the 200-week moving average, which would be everybody's 13K Bitcoin. It's just interesting. Max, you want to pull up some order flow and some open interest, and we'll take a look at some of the recent stuff there. I don't know if anybody else is.
I've actually got the TPO charts up initially, so let's go for it.
Yeah. My trading view is literally, it still is right now, frozen. I want to show you real quick. It's like literally frozen right at 40,000 on the dot.
Yeah, that's where we are.
I don't know why.
Stock.
Market makers coming in, picking up some biddy. All right. If anybody has any questions too, feel free to. Oh man, I'm looking at Ford Focus February.
So yesterday on the move down, we actually left some single prints for the guys that, it's not sharing my screen.
Sorry, that was me.
So when we had the move down yesterday, we've got some single prints that are left behind. We actually attempted to break into them on the first attempt here this morning, but we've rejected. But I reckon if we get back up there, which isn't too far actually, it's only like $60 away, chances are we'll probably close some single prints now that you've already rejected from them initially. And then, yeah, there's another single print up here. After this, there's a high volume node here from this day. You see it here. There's a lot of volume that took place, and we were only there for a very short amount of time. But that's why you had this little, not a range, but this little interaction in the charts in the middle here. And I'd probably expect the same. That's such a key area between 40,300 and 40,500. It's historically been like a very key area. It's actually been a low volume area. Normally you move through it very fast. Once you've claimed it, normally you go up. Once you lose it, normally you go down very often. And I know Magic's had it as a box on his chart for so long. It's just been a very key area. But yeah, I reckon claim it. We've got a single print above it. These are both very small single prints, so they're not anything to shout about. We did discuss, me and the boys, that we wanted to go over some old single prints to kind of just talk about them a little bit. And I actually have labeled them all on another chart. So if I fly this one over, look at that. I've actually already put some lines in some single prints. So let me cancel all of these. Reset. I was playing around while I was listening to Magic talk.
Yeah.
So these single prints here, I would actually, this was one that we left on the 27th of March, which we initially came down and tested and bounced from. But obviously we've lost it. So with single prints, they are inefficiencies on the chart. Magic's take on them is they are when market makers have capitulated the price, I believe it is. Am I right, Magic? That's what you say. He's not there, but yeah, I did believe that.
How I learned them is inefficiencies, yes, but it's where the last buyer or seller capitulates, yes, because then you get that quick move, you get that single row where it's just like boom, single print, single print, single print. There's no more resistance, no more buyers or sellers to resist whatever price move or range break you're getting.
So that would have occurred here. And my take on them is it's market makers pushing the price. They both work very effectively. But when you come back down initially, if we expand this section on the chart here, you actually came back down. And the reason that I've taken the single print from here and here is because this is just where two candles have, gone from one candle to the next. It's not by the book really, but it's just something that I've watched over time, and it's something that I like to mark out and just be aware of, that sometimes when you do get, just like, let's say the candle closed here, came back over, I still count that as the inefficiencies / market maker pushing the price away. But we've got an educational video on all this charts, because this isn't charts that some of you have probably ever seen before, and I have a lesson out of it in the academy. We've actually came back down, and what I was referring to is we came back down and tested it as support here. We actually got a $600 move from the top of that single print here, which, if you're day trading, what's that, like 1.5%? That's a great move. And then you've come back down, lost the top of the single prints, in my opinion, and then you've then filled it out. And that's how you can trade these single prints.
Max, what day was that? Was that 28th of March, 31st of March? What was that when we filled it out?
Yeah, this is when we filled it out, the 31st. So this was back when we came up to 48K. And, so we hit that key level that was at 47K that I think Magic was referring to earlier, which we all had so many levels at. It was the point of control from, I think was it Q4 Magic, or was it January? I can't actually recall. 47K.
47K is the literal point of control of the entire consolidation from January 8th, 2021 to now. It's like the overall. If you go to like all of the price action, it's there.
I was just going to show on a chart here, so there's like, because it's really hard to. I'm sure most people don't even know what they're looking at right there. But that single print, once we enter it, we shoot through it pretty quickly. So that was basically when we were right here. So this was our big push, and while we pushed up to that was what we were talking about, where we left all these single prints in this area right here on the chart, and we basically 47.7, right? We did our little top here for a couple days there, and then as soon as we came back into that single print area, we basically filled it out real quick, and that was one of the areas we were looking for.
In terms of like actual time frame wise, point of control, you were looking at the 6M2. meaning, the second half of the year. That was the POC for it.
Yeah, this is the TPO charts, and they're so beneficial to trade off and look at with the single prints, the buying tails. This is amazing. But let me go over to the footprint chart, which is what we can see the open interest on. So in this initial area, one thing I've spotted, very locally that I just want to touch on. There's not anything really major to talk about. Volume's been very low, but there's actually something on the chart that I found quite funny, because maybe I like to see people punished for stupid moves. If you look here, let me go on the 5 minute, actually, it's even better. If we go here, you can see as we broke below 40K, you had some guy open up an $8 million short just as we broke 40K. And I would say he put his stop loss just above 40K and was taken out exactly when we broke above the level. It's only when you're viewing the footprint charts that you can see where people are entering, where their money's coming into the market. This is the only place that you can actually see it. And then you can see where they get as well. You think if the guy's just entered a short as you've broke below 40K, he's probably thinking we're going down, like sell all his bags, absolutely shit himself. And then he thought, right, and where do I want to get out of this position? Well, just above 40K where he entered, because he's not going to want to get out for a huge loss. So he just popped his stop loss there. The market makers have spotted it. They've seen him enter here and thought, okay, let's get this guy. Give him a little bit. If he's taken profits there, fair play. But chances are he hasn't. And I reckon he's been stopped out there and is now kicking himself. If he only knew about the single prints and everything, maybe he thought, okay, very easy that once we start to touch these levels again, we blast up here. And you never would have shorted in this position. You never would have shorted after a single print, which is nearly always come back and retested as support or resistance. He got out way too early or entered way too late, let's be honest. But yeah, CVD has been, it's been pretty good so far since we've hit the 40K level. It's been since we hit a daily, let's say, to play it safe. It's been somewhat up. Open interest has been flat. It's what it is sometimes. Where else should we go over? Should we go over this area here on the chart? So you can see up here at the start, you had the swing failure pattern, which was a great place for anyone to enter a trade, but you had to be cautious in this area because the range hadn't really formed. So it was difficult for anyone that was trading it. Been in quite an uptrend. They probably presumed, maybe we go higher, but the chart just wanted to range. So there's nothing that nothing one could have really done if they were expecting us to go higher and didn't trade the swing failure pattern. Normally the best trades that we are given on the charts are swing failure patterns. There's no other trade that gives you such a risk reward, and it plays out as many times as they do. Normally, when you get a range like this, chances are that you take the high and then you come back down. This is like for day traders and swing traders as well. But I talk specifically from the point of view of a day trader, scalper. I'm in and out of trades super quick, and it didn't come up, and normally it'd take the highs again, and we didn't get that. So if you weren't in here, it was somewhat of a difficult place to get into a trade unless you trade some of the divergences that were given up. Here, stop loss above the top of the range. That's the CVD, which is another thing that we go over and teach in the academy in the Leading Crypto. But yeah, boys, it's the only thing that you want me to go over because, right now in the charts, there's actually not much to say in regards to the open interest or footprint, other than the fact that guy has just been punished. In the immediate, I'm looking at, it seems okay, but, volume's really dead right now. It has been dead since, since we broke above and came back down. Volume's been really dead. So there's not actually anything I can talk about in the immediate.
Yeah, that's pretty good. I'm going to pull up a couple altcoins here to finish us up with, unless anybody's got any questions for Magic.
I have a question. I got a question for Max. So when we hit that 47K high, like we trapped quite a few people, like millions of people up there. And you've probably got a little bit better idea than I do, but it seemed like a pretty good amount of people to, when you see something like that, you know that once you get that range reentry, that you're going to cycle the range because you have those trap traders up top there. Like that's the fuel you need to not just push it down to like the point of control or like, to like a minuscule, like local time frame golden pocket. You're looking much lower to like, again, the levels we're at now, like the $38,000 level.
So I'm going to put the level I'm going to go from the monthly open if this even allows me. There we go. So if I go from the monthly open, let me say that was the bottom of our range when we got up to that 47. That is the 47, 48K area. Or did we go even higher?
Now we went to 48,207.
Yeah. So I'm on the 5 minutes. So more of my chart needs to load. If I go to the 15 minute, it will send me back. But let's just do it. Give me 1 second as I find it on the chart.
But it just gives you that conviction to hold the short. That was something that I kind of was adamant about. Like once we got back into the range, I don't know. It was just, you can just kind of tell that this is going to probably rotate much lower.
I mean, if you look, there's been so many, the CVD actually wasn't super telling in the way of, you've seen more longs enter than shorts. Because if we do this, where I can actually draw some lines on my chart. If I do this, hopefully you guys can see this a bit better what I'm talking about. So the CVD, this shows people that have entered at market. So if you open a limit order, you won't be seen on the cumulative volume delta line, but what we can think about is, if the CVD line is going up like this, like that, let me just get rid of these because it's disgusting.
We've got more market longs coming in.
That's more market longs coming in. So, but you'd expect that as price rises, we have to have people coming in at market for price to rise. But if you look at the open interest, again, this is exactly what you want to see in an uptrend until they start to get put underwater. Okay, so we know in this area above this level here at 46,600, a lot of market orders have come in, a lot of longs have come in the region of it. Just looking at here off the top of my head, let me have a look at that for sure. So in the region of 760 million there, all the way up to 900. So around 200 million of new contracts have opened, and it's the longs that have pushed up the price. As soon as so that's the level you don't want to lose. You lose that level, you're going to really struggle. So with that knowledge, when we see the loss of the level, and just so you guys all know, these green dots and red dots, the red dots are longs getting liquidated, and the green dots are long positions, especially these are all leveraged, getting liquidated. This is why you shouldn't be playing with high leverage, because you're just going to be another green dot or red dot on the chart. And then that's all you're going to be if you're playing with high leverage. Look at how many people are getting wrecked in this market. It's disgusting. It's like the most over leveraged market there is. But yeah, after you know that level and you know this is where all the positions have entered, the market makers are also aware of that. And the people that are in these positions, as soon as they're put underwater, what are they going to want to do? This is why it was really telling. Once you lost that level, we know all these positions are here. The market maker is going to do one of two things. Once he's got them underwater, he's going to push price away to punish them and force them out of their positions. Also, when price comes, which I presume is what happened here, so he forced a lot of them out of their positions. But those that didn't, when the price came back up, and remember they're in the long, as soon as the price gets to their where they entered, they're going to get out of that position. This is just typical psychology games in the market. When the price, someone's put underwater, they want to get out at entry point, so they've got a minimum loss. So when price comes back up to test that area where we had all of those longs enter the market, price they all sell and price gets pushed away once again. And this area is now big resistance. And then everyone that didn't get out at this area, that was, didn't get forced out of positions here at a high leverage, when it and then they sold here. The guys that didn't get out, they really got punished down here. And these huge red balls, I don't know what the red bubbles. I don't know how many people that is. I think it might be 3 million. I think it might be 3 million liquidations. It's between 300K or 3 million on the liquidations. So it's it's a crazy amount when you see a big red bubble like that. It's a lot of people that are getting wrecked.
You don't want to be a big red ball.
It's sad to see, but this is why you don't trade with high leverage.
Well, you just become a statistic. This is your trade on drugs, so to speak.
Man, imagine looking at this. You can literally think, okay, where I'm getting the green dots, that's where I want to enter a short. Where I'm seeing the red dots, that's where I want to enter a long. And I've said it many times, and I think it is a big phrase when you're trading. If you put your put your entry where you would think to put your stop loss, chances are you'll get a better entry and not get stopped out of the position.
Yeah, there's a lot of people that trade liquidations alone on order book, or they try to, I guess. They get sucked into the whole, looking at bids, though. Then you're looking at, heat maps and stuff, and we both know how that can play out, especially in cryptocurrency.
Yeah, I mean,
it can get you, it can do well, but it can also get you absolutely wrecked because people can pull those bids anytime they want.
Yeah, true. That's why Magic, that thing on the volume chart that, I've showed you before, which we will have a lesson out on eventually. That's why that is so helpful, because you can literally see on the footprint effectively when liquidations are coming in, and you can watch it. So let's say you're going down, and this is coming in the academy eventually. You can effectively see when positions are, forced out, when people are forced out of their positions, you can see it coming in literally into the chart. And then you can see as it transitions from, people being forced out of their position to then, maybe retail or the market makers, pushing the price away from that level. And it's so good. I'm not going to show you it now, but that is all coming.
I was pretty shocked at how good that was, especially on the low time frame. Even like you could zoom in. When I saw that on the volume, I was like, this is gonna be good. I think you sent me that template. I need to tinker with it a little more familiar with it, I guess.
Yeah, because it's going to be a big one. And I imagine for the guys that are trading that are following the academy along with me, they're going to, it's a game changer. I must admit, it really is a game changer. I'd literally trade off that alone sometimes. I see it and I'm like, I'll take a trade from it. But it is better when you have a level, there and you can, or like a low or a high, and you get pushed below and you can see it. You can see the people getting liquidated and forced out of their positions. And then,
honestly, the biggest benefit to order flow, and this is not diminishing anything that I do. I do a lot of time frame stuff. I think that in terms of analysts that are out there, there are very few out there that can call the highs and lows macro wise that I can.
100%. That's way harder than just looking at this. This is like telltale signals.
But what this does, though, is you use order flow when we get into those levels, because a lot of people they can identify the levels, really can. Like, there's a lot of people that hear me say the levels in my videos. I'll tell people where price is going almost to the dollar, and they still won't take the trade. This is what gets you to take the trade. You know what I mean? It's not like looking at the RSI and going, well, we have divergence unless it dumps and it, then it's we're screwed. No, you're literally watching real time. Like, should I be in this position? Yes. Yeah. It's telling you exactly when to enter.
That's it. And in the academy, that how-to guide we have with the footprint charts, it literally tells you. Sorry if you can hear my phone go off. Let me just chuck it away.
I was wondering. I was like, geez, who's that?
Yeah, I have an alarm set for 7:00. So, and it's one of the ones that disables all your alerts. So it's just the alarm went off, there's a bit of Kanye song going off in the background, and then about 30 alerts just going through. So I apologize for that. But yeah, that how-to guide in the academy, it literally, so many people think, oh, but how do I enter? Where do I enter a trade? How do I know? Like, it literally says in the footprint chart, this is where you want to enter. And, that how-to guide that we've got for the guys that are taking notes.
Super valuable. I'll be upfront with you. So if there's anyone that's in the group that hasn't gone through Max's stuff, one of the reasons I really wanted him to handle this portion, like, I can do order flow, but Max actually trades almost exclusively from it. A little bit different style than me. There's a lot of order flow information out there. Not as much, I guess not a lot, but there is order flow information out there, but no one is actually showing you how to trade off of it. They're just showing you what it is. They're just saying, all right, this is a chart, this is a template, And then you just kind of have to figure it out from there. No one's really building statistics on this, and no one's actually showing you how to find a winning position. They're just handing you the tool and being like, hey, man, here's a Ferrari. Good luck.
I'll show you how to drive it.
Yeah, no, that's 100% what's happening, though. And I've seen it going on for about 2 years now. So that is a huge benefit. So anyone that hasn't gone through those videos and isn't going into, into depth on those really should be. I'll tell you this right now. Hang on, I'm going through the chat. We need layman terms sometimes. I'm assuming it does this. Yeah, you guys do need layman's terms, but I'll be honest with you, one of a kind. I see your comment there. And this is something that touches home to me. I will never dumb down content. And the reason is it devalues it. And it also, if we're dumbing it down and really, really trying to like get through the nitty gritty, you need to learn this stuff. There's no reason why you can't. You're not learning deficient. It just means you need to take the time, take notes, and put in a little work. And if you have questions, ask them. Honestly, it's the most important thing.
Need to be watched like 3 or 4 times. They really need to be watched so many times. Then, we do a classroom every fortnight on it. The next one is on the 25th of April. Well, for me, it's actually on the 24th.
We don't know what a fortnight is in America. I'm going to be honest with you.
What fortnight is? Are you serious?
We do, but I'm just joking. Like, nobody uses that term here.
Yeah, so the next one is on the 25th of April. You tools.
Nobody uses fortnight over here, but that's all right. But my point is like, if you put in a little bit of work and you take some notes, you watch the videos, like you put your phone down and you actually ask questions in the group, like in the classroom, that's why that's there. Like, you'll get answers, and it will help you tremendously. And I'm not saying anyone's lazy or anything like that. I'm saying like it's really hard to take this information and not condense, but like dumb it down, so to speak, where it's like, okay, we need this to be more simple. Like CVO does a really great job of that for what I've shown in the fixed ranges and with like volume and like how to find these. He honestly does a fantastic job of that. I just kind of like blurt it all out there and go. But when it comes to something like this, you really need to take the time and learn it because it is important. It's very intricate. And once you have it down and you know what to look for, like you're set for life at that point. You can trade any market.
You get an edge on the market. That's it.
Any market.
95% are losing. 95% of traders lose money. I don't know whether that's a real statistic or a fake statistic, but I love it. 95% of the market are losing money. So you have to do what the 5% do, It might be difficult and hard to learn, but if you put in the effort, you're going to join that 5%.
I understand that he's got a 9-to-5 with kids, dude. I got 2 kids, man, and I used to work 60 hours a week. I started learning the trade, and it took me a couple of years. I'll be honest with you. Like anyone that tells you trading is something that you're going to learn overnight is lying to you. It is a process. It does take time, but here's the thing: you can speed that timeline up with proper training and information, and go at your own pace. We're not expecting you to get it overnight. Just understand that when you say, hey, I need you guys to like bring it down a level, like if you have a specific question, we will definitely answer it. But it's really hard to bring down the whole lesson to like and say, okay, let me condense everything I just talked about and put it in like an easy to use like folder. In this instance, it's hard to do. And the reason is because if we do that and we do it incorrectly, it can cost you a lot of money. You can enter positions like these are generally when you're trading with this, you're trading with a little bit of leverage, hopefully not more than like 2 to 5x. But people do it. I don't judge, at
not
this point.
Like, I can't. 125x, you sure?
I've actually never taken a 125x trade. The only 100x trade I ever took, we were is back when I was hosting a free group, and there were like 600 people, and it was just an absolute nightmare. I took a 100x.
You're like the only trader that plays leverage to never ever be liquidated. I swear to God, I've never met anyone that says I've never been liquidated, and you're the only one.
Dude, I'm not even kidding you. I took a 100x trade off the weekly VWAP before we broke 20K, and I closed it at $22,000. I got in at like 18, and I was super happy with it. And I was like, this is the biggest percentage win I've ever had quickly. And I should have left it, man. I should have just left it to like 60K. I'm like, oh man, it was only like $1,000, but could you imagine me 100x long from like 18K to 16?
Would have looked great on Twitter.
Oh, it would have looked fantastic. I should have left $1 open or something, but I didn't. I honestly, I saw the pullback. That was when we were coming into like a 1-to-1, I think at the time. And there was like just some Fibonacci resistance, nothing crazy. Could see your price discovery at that point. I should have known better to close it, but I didn't. So, I left it open, or I closed it and I took profits and whatever. Nobody goes break taking profits. It was like a nice like $5,000. It was a bad. So
we're getting some buying imbalances on. And
that's one thing I'm going to be looking at
into that single print.
Yeah.
So chances are we just close that single print now, but it's whether we break that key level area.
Yeah, 40.3K is going to be a big one.
T-Bone, you know, I use literally 1 or 2x leverage, 2x leverage. I will never go above it. Like I've touched on 3 sometimes, but you know, I've it's one of my rules. You know, there's no need to go above it.
You swing your whole account, don't you?
Yeah, I do. My whole account.
What most people don't realize is that leverage actually doesn't matter. So if I'm using 20x or I'm using 2x, you should be running the calculation. I gave you guys the calculator, and position size is going to be adjusted. So if you're running a really high leverage, your position size is smaller. But if you're running a smaller leverage, your position size is higher. Your risk remains the same. That is what matters.
But I don't think people do that often. You know,
they don't. But honestly, that's the ticket to success most of the time. Like we can give you guys a strategy to let you win 70, 80, sometimes more percent. You know, wins if you're following this order flow stuff. Like you can win 80% of your trades or more. But if you lose your ass on all of your losses, it doesn't matter. You're going to wipe out those gains. Like you have to have some level of risk management still. So just keep the leverage. I guess I would say to moderate. You know, like don't do anything crazy. Like it's just one of those things. Like if you can't sleep at night when your position's open, then there's probably an issue going on. You know, hey, that's all right. If you're learning at turtle speed, man, that's fine. Like everybody learns at different. You know, everybody
slow
learns
and steady wins the race, mate.
It really does, as long as you're learning and you're not wiping yourself out trying to like trade too early and like going like max your full boat.
You should try. You should really try to get the whole thing with trading. Some people try and get everyone comes in and thinks they're going to get rich really quick, but you really have to. The real goal is to get steady, consistent gains. I've been trying to hit 1% a day for the past year now. I'm way behind on my schedule, but I'm way up considering what I would have been. Way up. But it's it's not, you're not getting 10% days. When I first started trading, I had some huge wins where I won thousands in like minutes, and I've not beat them days yet. But consistent gains will allow me one day to on such a small move catch huge dollar value trades. It's just building the account up to that level.
Wait till you lose thousands in minutes, man. It's a fucking trip.
I've done it. I look forward to it.
Yeah,
I've done it already, and I look forward to it happening again.
I've lost several. I've never been liquidated, but I have lost several Bitcoin on a trade before. It was not a good time.
I got liquidated once, and then I was out on a date, and I got liquidated with $2,000. Only $2,000, but let's just tell you that I got the bill very quickly and went home.
Yeah,
the first time I got liquidated, and I was like, I can't sit here and drink wine. Gotta go home.
That's exactly when you need to drink wine.
Yeah. It's so I'll tell this story because if you're in the group, you already know it. But when I started trading, like leverage trading, I guess I should say, was back in the 2018, 2019 days. I thought I was smarter than the market, obviously, back when it was dumping. And I had to learn the hard way. I lost 60% of my portfolio that first month. I got into a pattern trading group. We learned the basics. We learned the moving averages. And me and CBO actually are cut from the same cloth there. And I lost 60% of my money in a month, like all my money. I was a 6-figure salesman. I wasn't playing with like chump change. Like I was like, oh man. I was like, if at the time my partner, like we have kids, I was like, she found out, she would be fucking mad. I did figure it out though. And over 6 months, I turned the remaining money. I made an $80,000 profit in 6 months. And I was like, okay, I can do this. And I just got more consistent. And then I quit my job, and it's just been trading ever since. And really the big thing was risk management, understanding that I am going to take losses. Like no matter how good you are, I take losses still. I've posted a couple of losses in the group even. They're always small though. And the reason is because if the market's not in your favor, there's really no reason to trade. If you don't have an edge, like just wait, like there will be an opportunity for you. So that's all I would say. Just be patient if you do trade.
Exactly. Yeah. The trading thing too, man. It's like there's literally always whether there is one like at this exact moment or not. Like if you miss out on whatever waves or whatever's pumping, and near freaking T-Bone's killing it on near, but he's patiently waiting for his entries. He's not just jumping in on a random green candle or jumping in on a random red candle. He's waiting for his levels to be met. A lot of these charts that I put out for the altcoins, I mean, even just like this ETH chart right here, I mean, this is you're coming back down to 3 months. Well, you're kind of bouncing off of it right now, but looking for that yearly key level, that range high. I mean, like these things are just sometimes you're in the middle and you really have to wait, and it's like so great to have like levels in mind. And if you set alerts off, when we get down to this, if we get down to this 2-year key level, this starts ringing off, like you're probably going to get a bounce from here or whatever, like whatever your strategy is telling you at that point, like that's just what you can get on. And this is like, look at how many opportunities you had just within the last few days here on ETH. Obviously the macro move here would have been stellar, but you still had the high here, the high here, the high here, all these lows as well. I mean, there's so many moves to be had in that regard. So, and it's every single day, every single day. You don't have to catch everything on the the $1 Solana to the $300 all-time high. Obviously, that's the goal for most people, and everybody be happy with that. But aside from that, these small moves are, as long as you have a strategy and a plan here, and you don't just YOLO your whole account, especially like on things where, jumping in on something like this, and you might get lucky for one candle or something, but then you get the drawdown. So, yeah, I think everybody's got one of those stories, man, to kind of go with it. And then, yeah, the losses. I mean, everybody takes losses. I mean, even T-Bone was just posting some recently too. I mean, it's just part of it. So, all right, man, nice update, guys. So far, so good. We went over Bitcoin. Yeah, the last few months in the group have just been, just been the calmest. We were at Telegram originally, and it just got too much to post my information, Magic's information. You had to like manually add channels. It was weird. So we did move over to Discord, and just since then, I mean, we lost some people from the market coming down and whatever, but it's just been a really, really good move in there, and super, super calm during these pullbacks. Near's moving now, but in the middle of the range. I'll wait. Yeah, see exactly. So, yeah, for anybody watching, this on the recap here, right? So just so you know, we Magic and I and Max, right? We all run the leading crypto Discord server. So the link for this is in the description here on YouTube if you're interested in having access to all of our altcoin setups, our Bitcoin updates, our order flow and open interest analysis, our academy. We've got twice a week. So this is our first public video. We're actually coming all on here to do this. And we're going to do this probably every Thursday. Kind of go over the previous week, price action, things of that nature. But twice a week, we do 2 members only market updates in the group, Wednesday nights and Sunday nights at 9:30 p.m. Eastern. And they're recorded and put in here just for the members only. So this is where, throughout the active move from, the all-time high down to the $33,000 low, from there to the $48,000 high and so on. Like that's where you're going to get those updates along with a ton of altcoin updates as well in those videos. So for anybody that's interested in joining, like I said, the link is in the description there. I'll just take a look at a couple altcoins here. As Bitcoin's coming in, we're still kind of sitting right there at we haven't necessarily cycled through that whole range yet, or the whole range yet, down to the 38K level. But I just want to point out something here, and we're in a 3-day weekend now. So is all this info good for a swing holder? You can utilize this information as a holder even, we talk about the Bitcoin price action and, if that's going to take place more than likely over time. I mean, you don't have to be swing trading and actively trading daily, even, things of this nature, right? We were looking for, ETH to basically pull back towards these levels here. And I mean, this, generally doesn't happen, overnight. Essentially whatever happens to ETH, is probably going to happen to Bitcoin, and then whatever happens to Bitcoin, twice as bad is going to happen to the altcoins. So we were looking for a 20-30% pullback across the board. So even for your holding positions, I mean, you can utilize this information however you like it. So it's not necessarily, only for an active, day trader, so to speak. But yeah, I mean, it's it's geared towards there, I guess, to some degree. There's a little bit of everything for everybody. I guess I'll put it that way. Unless you're an H-bar holder. I'm about to show you the H-bar chart, and but anyway, so just taking a look at I'll take a look at ETH, H-bar, and Solana real quick. But just want to point out, right? So we were coming into these highs. We had that bearish divergence. We were looking down. I was looking for this yearly key level in the range high. This level right here was a previous untapped weekly pivot, right? So I was looking for this to be one of the main areas to come down into at first. That's exactly where we bounced off of originally. Took it back up to the monthly open here, got the rejection. Our new weekly pivot, which it looks like it's tapped here, but realistically it's not. This is untapped. So this is actually from last week. This is where I would imagine if we're going to get a push higher and a rejection at some area around 43, 44K, if Bitcoin runs it up there, that this is where I'd be looking for the next move up. At the moment, we're living back in this range, though. I mean, so it not looking too good in the short term here unless we get back out of here. But interesting to note, this was that weekly pivot that we were looking at in the group. We came down to it here, and exactly where we came up to before this drawdown once again. So short term here, we're back inside the previous range here for ETH. So not the best situation, right? We got rejected around here, came back in. We got our range high. This is our for the Q1 range here. So I really want to start living outside of here. We do have some buying pressure coming in along these levels here, as you can see. But yeah, essentially, unless we clear above this yearly key level here, that'd be the go sign for some more upside here, and that's right about 3,100, so about $70 from where we are now. I would be looking up towards this monthly open and this weekly pivot up here for the next area of major resistance short term. We discussed this idea last night in the member update that if we get to some level of this, right, you'd probably start putting in a bunch of head and shoulders across the board on pretty much everything. So it's just gonna be really important, and that's just an idea, right? This is all obviously on the idea that we do actually break up and run it up to this area. But I'd be really paying attention to Bitcoin at that point. I was going to say we're running into a 3-day weekend now too, so it's going to be interesting. We usually get some scam wicks and big pumps on Saturdays and this and that out of Bitcoin, and then by the time the CME futures reopens on Sundays, everything kind of settles back down. So do be aware of some possible moves coming in on the weekend here as we go into tomorrow. One thing I did want to point out is we do have some exaggerated bullish divergence here as well. So as maybe not as much on ETH as we do, I was going to pull up on H-bar, but essentially when you have like the price action pretty much flatlining and you got the RSI, putting in higher lows, lower highs, higher lows. Yeah. Essentially that's indicative of some bullish divergence here. It's known as exaggerated. Go look that up if you'd like. But, so indicative of us kind of having that last little move up here or a move up here in general. Once again, still just want to look for these levels here to be reclaimed for upside. Otherwise, I am looking down towards this 2-year key level as some major support coming in for ETH here in the short term. That would be another, this is implying that Bitcoin probably drops it down about 5% as well. So that'd probably put us at the bottom of Bitcoin's range, if I'm not mistaken, right? Where are we at here from the biddy range? 38.5-ish, I think, is the range low I was looking at. So yeah, around that 3 to 5. It's only 3% from here, but that's just an idea there, right? So for ETH, so looking for that 24-month key level if we do start dropping, if Bitcoin gets a little push out of here, and the same thing for Bitcoin, right? If we get that push, we got that weekly pivot that I'm looking for right here, coming in about 43.5, 43.6. If we get a rejection from there, right? Just similar to what we saw a couple weeks back is where everybody may start, dreaming up an inverse head and shoulders here. That's just an idea at the moment, however. But yeah, so just really we got to pay attention to Bitcoin right now, right? So ETH is not looking great as it did just re-enter that range. Bitcoin's basically at the bottom of its range, however. And then Solana, I did want to show an H-bar real quick, just to touch on those two. Solana, Matic, Shiba, a couple others that just hit Robinhood the other day, and pretty much only Shiba had a little pump out of it, I guess. But all of them were pretty much at their range lows too. I'll even show you how Shiba respected the range really well. and just basically shot up to the range high. Come on. So this is our range right here, right? We got our low, our high. This quarterly key level was coming in as some pretty decent support around here. Kind of front ran a little bit. Literally that Robinhood news came out, I guess, at the same note. Ran it straight to the range high. Right now we're coming down, right? We were supported at this monthly open, losing it. I would imagine if we don't hold on to that, we're going to come down to this point of control. Not even going to try to, throw out these prices. Just showing how, these even the meme coins respect these ranges so well. You can see how this monthly key level here, holding it down right there. Pretty crazy. So if we do break this range high, I'd be looking up towards this yearly open for the next major target there for SHIB, just as a random Shibby Shack. Solana was one, right? We got into at the range low right here, as pretty much everything was coming in at the last time Bitcoin was at 38K, right around the middle of March. And from there, we were looking for this yearly key level as the major target. Came up, wicked right up to it. And from here, I was looking back down to this range high area as a pretty decent little area of support as a pullback idea, and anticipating to see 20 to 30% pullbacks across the board out of alts. So that would have been my 27 to 30% right there at the range high. We actually pulled it back to the March open, so right at 30%. Basically, and once again, you got the price action kind of coming in with this little double bottom look. We're pretty much flatlining on the price as, once again, the RSI is putting in higher lows, right? So exaggerated bullish divergence right there, so signifying that you could have some underlying strength here to get a push higher for Solana. Very similar to Ethereum for me. Clear this range high about 104, right? Come back down, hold that as support, 4-hour candle close, daily candle close, whatever, really a 4-hour to start off. And then we'd be looking back up. Obviously, all really dependent on Bitcoin, but short term, this would be a decent little area as far as the trade would go, in my opinion. Really clear areas to put your stop losses below these support levels, right? Even if you just wanted to drop it below this monthly open, you're talking about 3%. It's a little depending on if you're going to go leverage wise, right? So you really want to look for that exact level to come in, but without leverage, you don't need to do leverage trading. And like I said, you run it back, say we run it back to even this quarterly key level or the April open, and you enter at the range high, you're still talking about 15, 16%. And that's without leverage. So H bar from my OC, Pet Doctor. So for H bar was one of the few, not one of the few, I guess, but one of the few that like quickly just basically rotated the entire range when Bitcoin started dropping from 47.7. So we ran it up, obviously tagged our range high. This was not a really wide range. I think it was only 20 or 30%. Yeah, 30% only. But from there, we were looking to, same deal, right? You pretty much losing your high. You look for that point of control as your natural target. At this point, the point of control is so close to the range low, you lose that. Obviously, your range low is next. So we cycled through. We're holding on to that area. We're not necessarily in the range at the moment, right? Technically, I guess you could look at this as almost getting back tested. But in a perfect world here, you'd want to see some reacceptance back into this range. Hold that as support. And then, you could put your stop loss down here, right below those lows. Another thing I want to point out here, right? Same deal. You got this exaggerated bullish divergence as you're making higher lows in the RSI. It's a 4-hour time frame, so nothing, crazy to where you're looking at like next 2 weeks of straight upside. But in the short term, I would imagine we'll probably run it back towards this point of control or this monthly open. And from here, once again, without leverage, 6 to 20% move possible there, and you'd have 3% stop loss, give or take. Put it right below these lows right there. What I wanted to show was that if we do lose this area, however, zooming out on H bar, right, is that there's really nothing else below us until you got this range low from a previous quarter back here. I think it's Q2 of last year. That drops you down to 16 cents, which doesn't sound like a lot from where we already are and where we already been. That is about 20% actually. And then that yearly key level, and this is from like 2019 or 2020, and that would be a pretty drastic drop. Now, a 35% drop out of H bar would, imply that we're probably going to see the whole market dropping in that regard. So not necessarily, something to start panicking about or anything like that, just kind of showing that those would be the two levels I'd look for if, Bitcoin really starts just melting to the downside. 16 and then 13. But aside from that, right now we are not necessarily at it, but very close to it, holding that support. And we are at the range low. So you can't, as Magic would say, right, you can't necessarily be selling here. You start losing these lows at the, and then you probably will be looking down a little bit lower. For now, I would be looking up, anticipating that, Bitcoin does move up a little bit as well. Obviously, we'll be paying attention for that. Do have all these levels here. You got your yearly key level up here back at 30 cents. And then from there, obviously, we got some other updates we can throw out there. So listening carefully. Yeah. So, that was for you. I mean, it's, I know that it's, this has been not the most exciting coin so far, but, this could very easily, push back up to the range high. And also take it up to that, yearly key level, about a 50% move there. So not confident in BTC. Yeah, I mean, that's the thing. BTC is, giving us some shaky moves. The only thing that I have to point out about Bitcoin right now, and this doesn't mean that we won't go lower, over the next couple of weeks or so, it's just everybody's really, really bearish right this moment. I mean, and like I said, we're planning on both sides as always, but it's very, very interesting that, at the end of the day, I don't see really anybody making a single bullish case aside from, maybe some of the random, I don't even think, like cryptos and this, and like, I think I've seen even them talking about 27K. Don't really pay attention too much to some of those, but I do, if there's a short clip, I'll try to catch it or see what's up on Twitter. But I mean, we really are just, still making higher lows and higher highs on Bitcoin at the moment. So, and then at the same token, right, if we do get that push back up towards that weekly pivot we were looking for, and that's just an idea here at the moment, since we're not just completely losing 40K at the moment. How overly exuberant, excited would everybody get? And that, like Magic says, when we were coming up to here and he was pointing out this $4,000 drop, which ended up being 8, when did everybody get the most panicked was right at 44, right? Like as we were kind of coming into that 44K, we broke back below, we weren't coming down and, touching that triangle everybody was looking for. And it was a 10% move out of Bitcoin, which, is a lot, right? Like a $4,000 move right now out of Bitcoin is a lot. And it instantly changes the dynamic in the market. We get in the same way to the upside. It's very quick to flip the script. You see a $44,000 Easter, miracle. I think everybody will quickly be, back on the super bullish side. And then that's really where, that's our range high. Right? Our range high comes in right there. So we really want to see the reaction at that point is anyways. And then the golden ticket, right, is that 47.7, right? We cross that 47.7. And then, that's when we start really looking back up. But that's the overtake. Hope all that made sense. Magic, Max, always a pleasure working with you, gentlemen. Hope everybody really enjoyed that. We 22, and then everybody's in extreme fear, and while even we are looking for those lower levels, I mean they don't have to come. But regardless, in place, and like just like up here, right when. Waiting till the middle when you're at like $42,000, it's a when I do live streams on TikTok, and I try to do them actually when the market is moving because nobody else usually is, and the amount of fear that's taking place in the middle is the worst. And like at that point you can't even you can't do anything at that point. You have to wait. You have to, like, what are you going to do here? You know what I mean? Sell everything at 42K, which you can, right? I mean, like obviously looking back now, you could have and should have and would have, I guess, but when you're coming down at this time, we were coming into, monthly key level NPOCs, you had all these things you're coming into. You really, you didn't know how low we were going to go at that point. This was your area to de-risk a bit until you got that confirmation. And then otherwise you're looking for, where we are now and a little bit lower to kind of like add some more risk back onto the table, right? As all the altcoins are coming into those range lows, like that's where you want to add some risk on. And then in a few days, if tomorrow we wake up and we're at 44K, well, that's not when you can get involved. Everybody goes through this cycle over and over and over again. Today, right now, this is when you should be planning. tomorrow when we're at 44K, it's too late for the short term, if that makes sense, right? So, yeah, that's where we're at. All right, gentlemen, you have anything to add before I close it up?
No, man, that was solid.
Perfect.
Yeah, all good, man.
Yeah, I knew you'd have 55 alerts to finish us up with, man.
Max has an alert for like every single like $5, like a tick size. Like anytime there's one tick size that's hit, Max has got an alert for it. So
I was like, I get excited because I'm thinking, like, yeah, like if my alerts start going off, like we're usually like coming into some big movement, or up or down, and every time I hear his going off, I start looking for mine, and yeah, it's like nothing, like $1.50.
I have alerts. I have alerts when volume comes into the chart. So it's literally whenever there's like a little influx. Like we just had 17 million there. I've had two alerts.
It's gonna hit my TP then, right? That's what you just said. That's all I heard.
It's looking somewhat good. I mean, we've just had a huge.
Yeah, it's coming up to that last local high. We'll see. It does need to close out some stuff there. I mean, the daily pivot's coming in that region, 40.3K, the 6M1 value area low. So, I mean, why not?
Where the daily pivot is, you've got the single print as well, the top of the single
print.
Print.
That's right. Yeah, close out the single print. It kills me that ATAS shows those, but it doesn't show where they start, only where they end, because the ATAS single print is there. It shows it like somewhere around like 40,000, like 289 or something. But OI just took a fucking dive. Wow.
Yeah,
is that showing an XO? Good. Yeah. Good Lord. Anyway, all right, guys. I've got nothing else to add. It was a good first live stream. Let's do it again next Thursday, maybe even more frequently.
I'm up for that.
Good. Appreciate it, everybody. Have a nice night, evening, wherever you are on this world. Like I said, if anybody's interested in joining the Leading Crypto Discord server, we do go over everything you saw and heard in here today daily. We do a lot more in-depth for the members and with the members, do a lot more educational content there as well. And pretty much 24/7 between the three of us. Good old Max is over there in Dubai and really covers us over the nighttime. It's about 6 or 7 a.m. right now for him and 10 p.m. for us. And hope everybody does well. Have a great weekend and holiday if you are observing. And until next time, everybody, cheers.